She's also just a boat. I wasn't on somebody. Yeah, one of these small boats, and then she just gave me the chance. Yes. That wasn't it. I was on Queen Victoria. I just said, well, maybe I've seen it. Yeah, I know. No, I've seen it. He's going to be chairing this. We're waiting for it to come down. What organisation? Have you got prepared questions? You know the first question? Nice to meet you. I'm Nikki. Nice to meet you. No, yeah.
Fantastic. So whilst he's getting mic'd up, I'll just welcome you all here. So thank you for coming this morning. My name is Sarah Fitzmaurice. I'm one of the CEOs and co-founders of Executives in Africa, Executive Search for Africa. So if you actually look in your bags, and if you haven't got one, there's a interesting little flyer on a search that we ran in Ghana for a fintech subsidiary, a CEO for a fintech subsidiary. So we're really clued into this sector and looking forward to hearing this panel. So our moderator today is somebody we know very well, Constantine Sanis. Probably many of you know him well as well. We date back to about 2018, I think it was, probably, when we placed him in a digital transformation role in Wema Bank in Nigeria. So from then he's gone on to join the IFC, where he is currently as a digital transformation and fintech specialist. Loads of accolades. He's won lots of awards for achievements: Best Digital Bank, Innovative Bank of the Year, Finnovator of the Year, and his work's been extensively published in the media. So I'm not going to go through all his education, but I think we all know he's a fantastic person to be moderating this panel. So would you please all join me in welcoming Constantine Sanis? Thank you.
Thank you very much. Thank you. Thank you. So hello, and thank you for attending this panel. So today we will discuss how new fintechs are creating innovative solutions to meet African Sustainable Development Goals. And first of all, I will want to introduce our speakers. Let's start from Gabriel, CEO of Paycode. So would you like a bit to introduce yourself before we start discussing on the panel?
Yeah, so Paycode is a smart card-based payment switching and settlement system targeting the last mile and the unbanked and underbanked. So we partner with banks to provide the software that allows them to reach further into their communities.
Thank you very much, Gabriel. Look forward to learning more on how we innovate in Africa. Then Llewellyn Morkel.
Yep. Thank you for being here. I know that you've had a choice between carbon credits on that side or sustainable development goals on this side. So I appreciate you guys being here. My name is Llewellyn. I am a fintech innovation technologist. I've been building fintech platforms for the banks for the last 22 years. Currently run a platform called Fraxium, which is an open source, zero gas blockchain. All that's as much tech as you're going to hear from my mouth today. We're going to speak about sustainable development. So happy to be here and happy to contribute.
Thank you, Llewellyn. And then Simon Tobelen. You're Simon.
Okay, thank you very much. My name is Tonderai.
Sorry, Tonderai Muteswa. Yeah,
yes,
thank you.
yes. So my name is Tonderai Muteswa. I'm the founder and co-CEO of Finclusion. We're currently providing credit in 5 markets across Africa, significantly in Tanzania, Kenya, and South Africa. And we're currently building out a neobank. So look forward to having a conversation with you about SDGs.
Thank you, Tonderai. And then David Davis, founder and CEO of Adunity.
So hi everyone, thank you for coming. I'm David Davies, and we take simple low-cost smartphones and we adapt them for the very lowest income farmers in the most remote regions of the world. And to do that, we make sure that the phones can work where there's no connectivity. For farmers that have very limited literacy, and most of our farmers have never owned a phone and certainly have never had a bank account. So we're dealing with the very bottom of the market, so to speak, and helping lift them up and give them services that everyone else takes for granted.
Thank you, David, and thanks everyone for your introductions, a lot of innovative solutions. So let's jump into the questions. Already we spoke about some innovative approaches, right? So would you like to elaborate further how innovation empowers, fintechs in this new market? So how does your innovation empowers the individual customers? Would you like to start, Gabi?
Yeah, I guess, almost all of the SDGs come back to financial inclusion at some point. I think 8 out of the 17 SDGs specifically mention financial inclusion as a target. So, almost everything we do is related in some way to achieving one of those goals. I mean, we focus on a few of them, in particular, but what I'd say is, technology and financial inclusion is the lifeblood of achieving SDGs. We're not going to be able to achieve them without doing much more by way of financial inclusion.
Great. And I remember also that, beyond the financial inclusion, other SDGs also have to do with empowering small and medium enterprises, digital literacy, and so on. So I think, the themes are cross-cutting. So maybe you would like to elaborate further also, Llewellyn, how your idea helps innovate and achieve the SDGs?
I think we need to just start off by saying to each other that fintech is not needed in any of those 17. Fintech does not by itself solve any of those problems. It might be a subset or a tool to be used in some other application in a solution. We are not going to be solving gender equality using JavaScript. It's not going to happen, right? It is going to be a combination of things. And I think that's where we look at. We stand back, we examine the problem, and we understand the problem. The guys at the GSMA, the GSM Association, they're doing really, really good work in understanding specifically gender equality in different countries, not only Africa, but other developing economies, where female entrepreneurs, as an example, get targeted for the fact that they are an entrepreneur. The moment they offer their cell phone number for a payment, as an example, that cell phone number gets picked up and they would get abusive calls or they get spam messages on that simply because they're a female entrepreneur. Now, it's from that point of view that us as technologists then stand back and say, what in the spectrum of technology is in front of me to solve that particular problem or to aid in solving it?
Thank you, Llewellyn. Tonderai?
To some extent, I agree with you, Llewellyn, but to a great extent, I think I have a different view. And it's more around, if you think about it, at the heart of business is basically the transfer of value. And to the extent, the reason for most inequalities, really the access to capital, right? Whether it's credit, whether it's the ability to come up with an idea and have capital go in that direction. So taking that example, if you look at the last sort of 15 years and you look at how sort of like that gender imbalance has been addressed by just reallocating capital using non-traditional ways of assessing credit, non-traditional ways of assessing opportunity and facilitating a lot of things. I do believe that there's a strong role that fintech can play in addressing these specific roles. Again, I do agree with you that it can't be one solution or one sector that addresses all the SDGs, and picking on that one. But when you look at it, just starting with poverty alleviation all the way through to partnerships, I think there's a very significant role that fintech in its broadest sense can play and provide an equal platform, or advancing most of the SDGs.
Thank you, Tonderai. And how about David? How about your...
I strongly agree with the idea that technology can't solve SDGs. But if you look at the SDGs, many of them, elimination of poverty, food security, gender equality, land and water, they all deal with communities that are predominantly very remote, don't have access to a lot of technologies, don't have access to a lot of services like banking and insurance. So I think the first thing we need to do is try to level the playing field to make sure that we don't leave people behind. We see that a lot, like the more wealthy farmers can get a farm solution, they can get a good contract with a buyer. What happens? They end up buying from all the smaller farmers around them who end up getting a smaller price than they used to. So one of the most important aspects in addressing the SDGs is to make sure we reach to everybody and make whatever technology solutions or other solutions we're giving to them accessible to all of them. Then what we find is most often the farmers can solve the problems themselves. If you get enough a group together and they can coordinate and communicate and trust, they can either solve their own problems or they can tell someone what the real problem is. We need microloans, or we need better access for women in the community. Usually those at a group, they're more than capable of giving you either creating the solution themselves or giving them the idea, or giving other people the idea that will solve them. But that's the first step, I believe.
Great, yeah. So indeed, building online communities can empower them and they can have a much better outcome, as you say, right? So, yes, so in all of these points that we discussed, right, the next thing that comes is we explore different technologies, central bank digital currencies, agri-lending and things like that, or open banking. So there comes the regulator, right? So how does the regulators in the different countries in which you operate help you or obstruct you from innovating and achieving the SDGs? Would you like to start, David, this time?
Sure. We've always had the policy that we stay as far away from government and regulators as possible at first, because what's key is always getting the community buy-in on what will happen. And then most of the places where we found that an active solution is working, we found that the government, as in the case of Indonesia, the trade minister immediately came to us and said, we know this solution's working and how can we help you spread it further? So we find it's always best to prove a solution and then let the regulator see it and adapt it. And I come from big banking and I find that when the opposite happens, it often hurts. You end up with a regulation that doesn't quite fit either. And you see that in the banking industry. Banks have enormous amount of contribution into what goes into regulations. In small farming, micro-lending, all that, the people that are using it don't really have that contribution. So the first step is get them together, let them show what they need and convey that so that the regulators can form a policy that suits the objective.
Great, great. Yeah, that's a good regulatory approach. And as you say, some regulators are proactive or reactive, so it's very good to help deal with some proactive regulators. How about you, Tonderai, like in your area of business? What do you think? Does the regulator help you or is obstructing you from achieving your goals?
Well, regulators have the tools to do both, right? On the one hand, you get instances where regulators are too quick into a market. For example, I think the panel earlier was talking about, blockchain technologies and cryptocurrencies and how some regulators were quick to embrace and say, how do we work together with players and solve this and, come up with regulations that make sense. Then others simply said, what we don't know it, we don't want it. And you can't transact in this, in these digital currencies. So they've got the tools to do both. Our experience has been, for the most part, regulators have got, if you think of, there are a lot of very progressive regulators. In Kenya only recently, if you think of the sort of digital credit landscape, it's only recently where regulation has come about. Before they allowed players to experiment, And now they're stepping in and saying, okay, let's think about consumer protection. How do we enhance consumer protection? And that is good for the industry. If you think of how, from a regulatory standpoint, Europe has gone, way ahead of most institutions. The fact that open banking was regulated, it was, that initiative to allow someone to own their data and to share it with a third party so that they can come up with a solution. That had to be regulated to be enforced. And it's, you sort of see that need in Africa when you think about the African continent, that the more open banking we have, the more people have control of their data, the more solutions that will actually be able to be developed and share, to address particularly the problems that Africans are facing. So in my mind, regulators, it just depends on what they want, but we do see, a broad, we do see many, sort of outcomes, based on which side they sort of fall, either bad or good, just depending on which regulator it is.
Thank you, Tonderai. Your take, Llewellyn?
I'm going to agree fully with you. Yeah. So we've seen in Africa a lot of regulatory progress on this, where regulators are super open for us to approach and say, guys, whatever you're busy with, let's understand it. Let's take that step, go through the detail with you. We've just been with the Central Markets Authority in Uganda, and they were quite happy to allow us in, had an entire team there, and they dissect everything that you do to understand it, to understand where the risk lies. Coming from a crypto blockchain background, regulators are often seen as the bad people, as the evil part, the one that wants to suppress technology and innovation. It's not true. The regulator has a job, and that's to protect the consumer. And if you've seen in crypto and in blockchain all the scams that's come about, because there's not enough regulation, I'm not saying over-regulation, I'm saying not enough regulation, the regulators play a very important role. And I would like to see a lot more of that within the Sustainable Development Goals, the SDGs.
Absolutely.
So that we understand where those regulatory lines lie and how they can actually aid us in rolling out support to communities much faster.
Thank you, Llewellyn. And Gabi?
Yeah, I guess our business model, we don't come into contact with the regulators quite so much because we work with banks. So we're working under a banking license, if you like. So, I mean, I guess the criticism, if I had one, would be the speed sometimes with which they operate. We're going much quicker in some of the things that we're doing, and it sometimes takes the regulators a little bit longer to catch up. So, and particularly around KYC. So, we just think it's unfair for people to be excluded from financial services because they don't have the documents that we've kind of traditionally expected people to have. We think there's an alternative way, and we use biometrics to onboard people. So if you don't have a passport and you don't have a birth certificate, you don't have a, utility bill, does that mean you're permanently excluded from inclusion? And we say not. And we say the regulators should take a different approach and maybe have a more tiered structure. If people are transacting $5 a day, they're not financing international terrorism, and we should create our regulations appropriately.
Thank you, Gabe. And you mentioning biometrics brings me to the next question. So, we are all innovating in your corresponding markets, right? So what is the biggest challenge you see, moving a bit further than the SDG focus itself, what is the biggest challenge you see on you innovating and continuing to innovate in the markets you operate?
For us, the challenge is how we get cash completely out of the system. We're quite often involved in digitizing part of a flow. We do work with, the World Food Programme and United Nations, and so we're able to innovate and digitize part of that flow, but quite often we come up against, when you get down to the community, they still want to turn it back into cash because that's what's accepted. So where we're innovating is is how we bring that cost of that digital interaction down to a very low level. So we're now able to use facial recognition technology as opposed to fingerprints. The technology's improved so much that now that's a viable option for, low light conditions and dark skin. And that was never an option before. But what that means is we can now start to use low-cost smartphones, and by using things like secure elements, we're able to make those phones still work offline, because the fact is half the world's population still doesn't have regular access to the internet. So we're driving down those touch points so that every market stall, every corner store has the ability to do a digital transaction. And it's not until we get to that point that cash is going to be completely removed from the system.
So multiple innovations in infrastructure, multiple challenges in infrastructure and regulation area, but you keep having different approaches. So Llewellyn, please.
Yeah, there are two parts for me. I'm going to link to Gabriel where you said KYC, AML earlier on. User onboarding is still a major issue. It's probably going to remain our biggest issue for a while, and the cost associated with that, that's a big one. But also then, people don't necessarily want to go digital. Example from South Africa, they've been trying to get cash out of taxis, these minibus taxis, for a long, long time. And it makes perfect sense because the commuters don't always have cash with them, and if you have cash with them, you become a target. And if you're a target, they can rob you. So what they're trying to do is make all of that digital, but that means the taxi driver or the owner then needs to work with cash, receives the payment electronically, which means they need to report the income, which means they become taxable. So there's a strong resistance from that level saying, we don't want to do electronic, thank you very much, we are much happier taking cash in. So once again, there is a need for regulation up to a certain level to say, let's open up to a certain point, allow free transactions that we will monitor up to a certain point only, or from a certain point onwards only, to allow this adoption to come through. And once the adoption is there, then everybody has it, and then you can start regulating it.
Great, yeah. And this, what you just described, online payments for small buses,
Yeah.
In other markets, we see it being dealt in different ways. So it's very interesting. For example, I think there is this new idea in Nigeria. We're trying to do the same, but it's the similar situation. Like, there are some regulatory challenges, infrastructure challenges, and it's very interesting to see how innovation can help this area. So how about Tonderai? How about your area of operations? How do you see innovation and the challenges you're facing?
Yeah, I think it's similar to both Gabriel and Llewellyn's points. The cost of doing business, particularly in the lending space, is still high at a certain scale. So we're relatively small compared to some of the much larger players. So when you think of the cost of funding, for example, accessing funding at a certain cost, it's a bit difficult, even accessing it in local currencies. So you typically borrow in foreign currencies, and if anyone has been seeing what's happening this year with, sort of like the USD rate against all, local currencies, then there's that extra FX cost as well. So you do find that on the one hand, just the cost of funding is high. Then on the other hand, executing transactions, when your customer wants to transfer their money to a different place, a different country, the cost of, sort of cross-border remittances remains high. Transactions below $100, which are the majority of what you will finance if someone wants to finance someone back somewhere else, those costs remain high. Going across borders is easily 10% most of the time, which is quite expensive. So I think a lot of work needs to be done around, the shared architecture that Gabriel was talking about, really driving those costs down. And also a little bit more work in terms of maybe driving, and a lot of progress has been made. You can't compare 5 years ago to today in terms of themed funding going into entities such as ourselves. But I do think there's quite a bit of work to be done just to sort of drive those costs further down. I think that's probably the greatest inhibitor to innovation right now.
Thank you, Tonderai.
Yeah.
David?
So I'd say something slightly different because our perspectives are different and a bit unique. I'd say making capital and loan finance available to the very most remote communities is the biggest impediment we see. And there's a very good reason for that. It's very difficult to deploy a $200 loan cost effectively because often the administration costs can be much higher than that. But for example, for say a coffee farmer in Ethiopia, $200 gets you a phone, gets you training and support in the cooperative, it gets you some equipment for your farm, and that $200 will lead, on average, for that farmer earning well over $100 per year over the next 4 years. So he can easily pay it back, but there's no system in the world that really allows those farmers to get that sort of package at scale. And I understand for organisations like AFSIC, it's very difficult. How do you deploy like millions of $200 loans rather than lending $200 million at one time? But that has a really horrible flow-on effect because those very poor farmers have no access to credit, or if they do, it's the most horrible sort. Before the change of administration, we were talking with USAID, who'd identified in the Mekong Delta region, the primary cause of human trafficking is farmer debt. So farmer, something happens, the farmer gets in debt, has to borrow. Who's he borrowing from? Loan sharks who are connected to human traffickers. No farmer wants their daughter to go into slavery, but that's intended to what happens because they get loans at such high interest rates that they'll never pay that back. But USAID had a very big problem with that, is how do you deploy like really small loans, because often it is a very small amount into those regions. How do you collect the repayments and how do you administer that loan is very, very costly. So if we can solve that, we can give those remote communities the ability to sort of change their own life and also avoid these other really horrible pitfalls.
Great, thank you, David. And I think your example, brings us back to the SDGs and specifically how does the technology you develop and your overall vision for the company, how it helps achieve two specific sustainable development goals, the one with gender issues and the other overall sustainable development and impact in the environment, right? So would you like to take on this, David?
Two great examples of that. So firstly, a majority of our farmers are women. When you go into really small farming communities, you'll find that women are almost always a majority. We see this across a dozen countries. But women, as we were pointed out before, are the most disadvantaged in a cash society. And using Papua New Guinea is a really good example. We hear the women say, I'm taking in coffee or cocoa beans where they're getting most of their income in one bunch. I bring it back to the village and the men turn up and they want to have a party and it's gone the same night. If that woman can order a solar kit or pay the school fees at the time or just leave the money in the cooperative. So when we first did our project in Bougainville, it was a woman-run cooperative and the women did not want to take the cash out. They were taking it, they had like 500 kina from an average cocoa crop. They were taking out 50 kina at a time so they weren't exposing themselves to that risk. So going cashless is incredibly empowering for women. The other thing we've noticed, and this is a wonderful project in Timor-Leste, and we're hoping to replicate that in Ethiopia very soon. We have a coffee company in Timor-Leste that's been paying the farmers for coffee for a long time, and they've been encouraging those farmers to grow trees and regeneratively for carbon credits. And those farmers are actually earning almost as much from the carbon credits. We should be in the other panel, shouldn't we? Those farmers are earning almost as much from the carbon credits as they are from their coffee.
Great.
And that company has to sponsor them over a very long period of time before they create a saleable certified carbon credits. And these are the real thing. They're not the greenwashing style of carbon credit. This is a farmer that's taken somewhat desertified land, they've greened it up, they've been using regenerative practices, and that's a very, very good carbon credit. We're doing the right thing.
And they can sell the carbon credit in the local market?
No, that's the thing. So that's where there's a whole infrastructure that needs to come out. So you need to pay the farmer to do it, you need to put the proper IoT tags in the thing, you need to certify it there, and then you need to take the credit to another market. And that's what this wonderful coffee company in Victoria has been doing.
Great.
So we're now trying to get some bigger coffee companies to do a similar thing in Ethiopia, which is perfect this scenario, because all our Ethiopian farmers, the coffee farmers, would earn more from growing carbon credits. And to be honest, if you think about it, there's 500 million micro farmers in the world. Imagine how much carbon they could sequester and how much they would do for a few extra dollars a day. We can eliminate poverty, we can sequester a lot of carbon, and we can create really good certified carbon credits because they're the real sort. It's not like replacing, it's not like I've got this land and I'm not going to farm it anymore, so I'll call that a carbon credit, which is what we're doing in Australia quite a lot at the moment. There's very good opportunity for that, and it's not too difficult to create the infrastructure. This small coffee company has just done it by themselves. We think we can do it on a scale of thousands of farmers in Ethiopia as a test. And most interestingly, we've introduced a digital token that we used as a coffee reward system. So a bigger coffee company in Australia soon, you'll go in, you'll buy their coffee of the month, and you'll get some aggregate tokens, and you can choose one of the farmers that grew that batch of coffee and release it to them. And that 40 cents is actually pretty big money in Ethiopia. But the next step is you can incentivise them with that same 40 cents. I'll give it to you if you're growing regenerative or sequestering carbon.
Great.
Yeah. So I love the idea of my son uses his pocket money to pay a farmer in Ethiopia to grow green, and when they get a carbon credit, they split it, and he's made good return, and that farmer's made some whole additional income for greening the planet.
Great, great. Yeah, that's a very good example of how we can connect all sustainable development goals in our everyday almost activity, right? So that's great. Tonderai, how about you?
Yeah, I mean,
how does your idea again, tries to achieve these two development goals I mentioned, gender, gender issues and social and environmental impact?
Yeah. That's a great example, and I probably should be contacting you to see how best you can also leverage on some of the work you guys are doing. I think our side is more about intentionality. A lot of the partners that we've worked with, even our investors, have been very focused on getting even our reporting, internal reporting, the internal communication to sort of disclose those nature of activities, right? Whether it's gender metrics, it's age metrics, things that you focus on, because what you measure and focus on every single day, you're probably going to actually do something about it. So on the one hand, it's intentionality. And then on the second sort of level is the reason why historically there's been a lot of, especially in the financing space, a lot of differences between genders. Is because if you think of the type of lending that was there previously, it was focused on collateral, it was focused on people that were gainfully employed, and unfortunately in Africa there were significant biases because collateral was registered in the name of the the husband in the relationship. What we try and do is focus more on the project, focus on affordability. If someone comes to you, what do they want to actually do? Then you try and assess it on the merits of what they're trying to achieve. It's a good thing. We also leverage on things like mobile money transactions, just to understand how if it's someone that has got a small shop, what have they been doing previously? What have we seen? And then disclosures around the cash business. So they'll tell you, this is what we do, I sell so many units, and then you can quickly reconcile to see where the balance is. And that is naturally seen as, increase the proportion that we lend to, on a gender equitable basis. And that's something we are still working on. We do think the fact that we're focusing and thinking about it and reporting on it, that will gradually improve over time. So I'm pretty happy about the gains that we've made on that front. In terms of climate, again, it's a lot of financing. We do a lot of agricultural finance. It's something that, again, I'd really love to work on because we haven't really found a strong retail carbon credits, the ability to monetize that. And it's something that we've really been looking around, and we really feel that if that sort of infrastructure, the trading platforms around that are done at a retail level, we could gain so much, in terms of how we impact, the climate change agenda. So from that perspective, I think maybe that's how we are currently impacting those two SDGs.
Thank you, Tonderai. Llewellyn?
So gender equality, I think we can start by getting more females involved and uplifting them in fintech, because 5 guys sitting around speaking about gender equality, it's about bizarre.
But exactly.
More on the side of dissolving the inequality, not gender inequality, but general financial inequality gap. That's, I think, the 15th or 14th goal. We've done a fractional investment platform that allows people to invest whatever they can afford, whether that's 1p or 1 Kenyan shilling, which is about 1/100th of a p, I think. Being able to invest that into property or in listed shares or in student accommodation, and being able to continuously doing that, being able to offer your workforce, your farmers, that little compensation, a pound, a dollar at a time, that you invest on their behalf using a fractional investment platform run by an institution that actually understands what they're doing, that is responsible and governed under the regulatory framework. I think those are the things that can make a difference in building people and in building wealth, getting people involved in the financial system.
Thank you, Llewellyn. And Gabe?
Yeah, I spoke earlier on about the challenges of being financially included, and I think that's worse for women generally. They're not as likely to be involved in formal finance. But the platform that we've built is a great leveler from that point of view, because we did a project. Actually, we received an award last week from the Pay 360 for financial inclusion, a project we did for female farmers in Zambia. They're able to open their own account. When we distribute the funds, those funds are sort of locked away in their own wallet, and the only person that can access those funds is the person with the biometrics and the right fingerprint. So what we found, and that project was good testimony to it that we did with FSD, was that these female farmers were able to receive their own cash, manage it into different wallets. We all know that when women manage finances, they do a better job than men. So that kind of works just as well for farmers in Zambia. So it's a great leveler from that point of view. And I'd say on the other subject of sort of carbon, by digitizing the sort of day-to-day finance, we're able to open up a whole lot more. We can nudge people in the direction of the right type of lighting, for example. It makes sense to have distributed solar lighting in lots of places. So giving people the ability to make those micro payments can nudge them in that direction away from, burning wood and burning oil and burning gas and things like that. So those are important steps that fintech is able to bring to those SDGs.
Thank you, Gabe. We have 8 more minutes for this panel to finish, so I will ask one last question, and then we'll open the floor for questions from the audience. So the last question is, we are now 10 years later, 2030. The SDGs are for 2030. So in a couple of words, how do you see the fintech future in 10 years' time in your area? Like, what are the developments you see in your area in the next 10 years, taking into consideration the SDGs in a brief sentence, right?
I guess we're going to see some sort of digital currency, in my opinion. We're a lot more engaged in emerging markets with central bank digital currencies, for example. I think we're going to see those before we see a Bitcoin. So, what's really interesting when we start to do those kinds of smart currencies, if we can open up a world of decentralized finance. David talked about people not having access to be able to get a mobile phone. I mean, the great promise of decentralized finance is you can borrow cents, you can borrow a dollar, and you can do that wherever you are, whatever documentation you've got. So I think we're going to see more of that, and that's obviously got to be welcomed. We've got a long way to go. Some of that software is still a bit not ready for prime time, but in 10 years' time, I'm confident we'll be using digital currency throughout our entire ecosystem.
And I think the Africa Free Trade Continental Agreement can also, be very important to the development of these technologies.
Yeah, absolutely. It's going to have a big impact on cross-border, isn't it? I think people in London and other developed markets have requirement for instant gratification, instant access. I think we're going to see that. That's going to drive the way our products evolve. People want things now, and they want payments to happen now. And they want it to be as simple as it is, making a national payment to making an international payment. We're going to see that impact on remittances and cross-border, and particularly for Africa, keeping trade within, the continent of Africa is going to have a big impact on uplifting all countries.
Thank you, Gabe. Really?
Very shortly, I see in 10 years' time at least 3 unicorns. And I think in the African market, the world is going to depend more and more on Africa as a breadbasket. There's going to be a lot more trade flowing into Africa. And I think there's a lot that we can do as fintechs to help the people at grassroots level benefit from that. And that's what I want to see.
Thank you, Llewellyn. Tonderai?
Yes, I think I echo what Gabriel said. I think decentralized finance will become core to financial services. I think there will be more just, personal ownership of your data, how you handle it. There'll be more, instant services around whether it's credit, investment, savings, and a lot more automation around how financial decisions are made for the better. So that's, 10 years from now, I think that's where we're going.
And I think, the actual data confirms this trend, because you see that some governments, like Kenyan government, is very proactive on CBDCs, or the biggest searches on cryptocurrencies come from Nigeria and Ghana. So, we see that already. And even, I think the cross-border transaction cost between Ghana and Nigeria is bigger than with other countries. So, there are many reasons where I could agree with you. Yeah. So, David,
I can actually answer it in one word, but I'm going to have to explain that word. So, waste. So the first 2 SDGs, and really everything follows from them, is elimination of poverty and food security. What a lot of people might not be aware, if you go to really remote villages or that are producing either commodities or fresh produce, the amount of food that goes to waste because of inefficiencies in the supply chain is off the charts. About half the cocoa that's produced in the world never gets to anywhere. Coffee's a bit better because it's easier to handle. But a lot of your fresh produce, inordinate amounts go to waste just because the farmer doesn't know which market to take it to, or there's a broken supply chain. And that got incredibly bad during COVID, and we saw that firsthand. If you can eliminate the waste in food chain, or just reduce it a fair bit, the whole feeding the increased population of the world in 2050, that just goes away. You don't have to solve it by more efficient. You just stop wasting. But in the same time, we eliminate poverty. And then once you do those 2 things, equality for women, land, sea, environment, a lot of the other ones start to solve themselves because you've got more affluent farmers who will start to fix those issues. So if we focus on waste, and if we do achieve a lot of the SDGs by 2030, that's the thing we have to fix, the waste that's in the system.
Great. And indeed, you'll see, there have been a lot of startups in developed countries that have tried to get way to, use the waste from markets and so on. So indeed, it's a very great opportunity as well.
I was at a panel in Indonesia in the G20 last week with a company from China, and what is so fantastic is how far China's gone in that thing.
Great.
And he was saying that now even the most remote villages in China is connected, and those farmers can sell their produce online to people in the city who will buy it because they know they're getting it direct from source. And China has massively reduced waste by the infrastructure and by the digital system. What we probably need to do is look at what they've done and replicate that similar model in many other countries around the world.
Very interesting indeed, yeah. Great. Thank you so much. So we have 3 minutes, 4 minutes for questions from the audience. So who would like to ask something our panelists? Please.
Hi, thank you very much. My name is Stanley Anyete. I work for Triodos Investment Management. I'm also a professor of sustainable finance. And for me, anybody on the panel can answer this, and I would just really like to understand, why do you feel that it's an importance to link African development in the tech space to the sustainable development goals? Can we not just look at African development in the tech space without linking it to the sustainable development goals? Because I do not think that works for Africa, unfortunately.
Short answer is yes.
I would say we all agreed with that before. I think,
just yes.
I think sometimes things work in synchronicity, in that if you start to improve one, the other will improve naturally. So I don't think you need to link them. I think if you improve financial services for the poor and make it equitable and reach everyone, you really are addressing a lot of sustainable goals, not just doing it. There's just no hard link between them. It just happens.
Next question. Okay. I think we are just on time, so if there is any other last question, we can take it. If not, I think we can conclude this session perhaps. Thanks very much for your presentations. Thanks for attending. And yes, Sarah, I will, yeah, please.
Fantastic, thank you. Really, really interesting and some really great points. So I think everyone will be delighted. So let's show our thanks to the panel and the moderator for their insights.
Thank you.
Thank you. You are now excused. We've got another panel coming up in 5 minutes. I think hopefully the panelists are around. If they could come up onto the stage would be fantastic. Get wired up. This next panel is going to be hosted by James Dorey, and it is on how is the utility death spiral relevant to Africa. So a really interesting and challenging title. So do hang around for that one. I shall